SEC Chair Gary Gensler faces the heat. More crypto firms tease moving away from the US, and is Russia planning to use cryptocurrency for settlements? Welcome back to the Collective Shift Weekly Recap. Actionable insights and a breakdown into the crypto market, all in under 30 minutes. We have a lot to get through, Nick. Let's start with the market news and some market updates. What's happening, Nick? Tell us.
So major inflation news came out from the UK. A lot of people were really excited, I think, with US inflation that was trending down and reaching historical 2 to 3% target, but the UK is kind of bucking the trend here, and they've got persistently high inflation above 10%. And so this is some of the highest inflation the UK has ever seen, and it is really concerning, especially when you consider the trend maybe in other parts of Europe, or especially the US, where inflation is trending down. So we also had those concerns hit the market, and we also saw crypto markets take a bit of a hit. Not sure if you've too much about it, but we've had I think about a 9% retrace for Bitcoin and about a 12% retrace for Ethereum. Not sure your thoughts there, Leon, but I know it's sort of not entirely off the mark here, considering the large acceleration we've had all year, above 90-100% for Bitcoin. So to me, this is a bit of healthy. What do you think?
Yeah, I definitely agree with you there. I think it's very, very healthy to see some kind of pullback after the enormous gains that we've had in the market so far. From the start of the year, we've had 70 to 90% return of investment on Bitcoin and Ethereum. That doesn't happen in normal markets. And so when we have such a giant pull forward, we got to pull back. You got to take a breath. Yeah. You got to, recruit your troops, get ready for the next rally. And I think that's where we are at the moment. But of course, there are other factors out there, kind of the macro factors. You're speaking about inflation, 10% to the UK, concurrent inflation as well. So this is not just one time. And that's scary to me, to know that people are just like, their money that they worked very hard for every year is just eroding away. 10% this year, another 10% next year. And it compounds on each other. And people are now starting to think, hey, maybe we should think about an alternative to this system. And so they go to Bitcoin. And of course, we see this 70 to 90% giant increase in this year. So yeah, to me, as we always say at the Collective Shift family here, we zoom out. We look at the bigger picture, right? Yes, we have increased 70 to 90%, and it could go much, much higher if people start taking seriously Bitcoin, if people start taking Bitcoin very seriously. So yeah, I guess, there could be higher inflation elsewhere. We've seen some of the third world countries around the world have consistently high inflation. And this is the first time kind of where it's hitting the Western countries a lot harder. So I think it's something to really keep track on. In Australia here, we're doing quite well. In America, I heard inflation isn't as high as the UK, but hey, this isn't bad for crypto in the end. I just see good things for crypto from this, man.
Yeah, maybe getting on to some more concerning news we have out of the SEC. I think this is going to be a heavy focus for this week's episode, because we had some sort of massive news with SEC all round. So one of the major ones is they're targeting smaller exchange Bittrexx, which is really faded from relevance. It's not super big exchange. It's one of those smaller ones that have really pulled away from the US market because of this enforcement action that was coming. So it's really interesting to me, because I think we're seeing the SEC potentially start to really gain some momentum, to pull some more enforcement actions against Coinbase. Yeah. So we saw a few more small exchanges in the last few weeks, in the last month. Now we're seeing them target a few more. Really concerned now, and I think we're all waiting for the big Coinbase announcement that they're going to be officially taking them to court. So really concerning with that one. And the highlight there is we saw that they actually cited some other cryptocurrencies as potentially
6 of them.
Securities. So one here was Algorand, which a lot of people had fun with on Twitter this week.
That's right.
Gary Gensler's sort of previous comments on Algorand, but they also mentioned other cryptocurrencies such as DASH, which is a more privacy-focused coin.
Doesn't that bring back memories, Nick, from like a long time ago of Dash when it first got on? The first like staking or master nodes or something like that. Man,
yeah, they
memories.
had a lot to say as well in the filing. They were talking about the master nodes and like who exactly has say over what happens in over the Dash platform, and even who got access to the cryptocurrencies and how it all works, who was the core decision making. So that was an interesting sort of litigation there that I was sort of digging into, and I thought it was really concerning that we had 2 of these cryptocurrencies, which I don't think we would have pinned in that bracket. They probably would have been maybe in the safer bet, nothing's really safe in crypto.
Nothing's safe. No.
Algorand and Dash, there were two ones that you're sort of saying that maybe this just means that, opens the scope then for what they're really saying, that this really encompasses everything else Bitcoin. So really, really concerning. And I think we're going to see a lot more out of Coinbase and possible target in the next couple months.
I think it's also worth noting the other tokens that they did go after and did mention by name, which was Token Card, TKN, Naga, NGC, and iToken House, which I've never heard of, IHT. So they're all named in the complaint as well. But I agree with you. What you're saying here is that this could be them setting a precedent, going after these smaller exchanges to try and build a whole case study and build a precedent to go after the big honcho in the market, which is Coinbase at the moment. And they know if you go after Coinbase, you go after the king, you got to be ready to fire because the king is going to come back after you. And I'm sure Coinbase is probably going to go after the SEC as well after. So they're trying to get rid of the small ones, kill the pawns, and then you go after the king. I think that's the strategy for this.
Yeah, and it sort of moves next to our next points that we had that I took away from this week is this acceleration of potentially moving crypto outside of the US. So this is kind of a game of chess, if we can think about it, I think, is with Coinbase now. They've actually come out and said that they've got a license in
Bermuda license
for a derivatives exchange. And they've been talking about potentially this idea of UK has more friendly laws, or they're going to pass more friendly laws, and we may have to move there. So this is kind of an interesting game of chess I'm seeing, is that they're sort of moving away now and pushing their hands, because this gives massive ammunition for a more pro-crypto stance in the US. Because if you're having market leaders like Coinbase move out of the US because of failure to provide more clarity or provide real rules in the industry, then really pushing the hand of regulators there, because, biggest exchange in the world outside of Coinbase. And if they do move offshore fully, then I think it's a really damning, opinion of the US regulators' stance that have happened so far. So we also saw Gemini, which is another big exchange, has followed the same moves and looked to introduce a derivatives exchange outside of the US. So two major players that are really looking to mount pressure on regulators and moving offshore, just because there has been no clarity so far. And the clarity that has been given is just very hostile to crypto.
Yeah, and just to break it down for the audiences out there, if you're listening on the podcast or if you're watching on YouTube here, what's happening is that America, or the US, the United States, is known to be the innovation hub of the world, right? Where the capital markets are. You come here, you raise money, you be an entrepreneur, and you make it big, right? And to have that, you need to have the innovative technologies. But what's happening in America right now is that because of poor regulatory clarity, these innovative crypto companies are moving out of the US. And so these regulators come out and say, hey, Gary Gensler, what are you doing? These guys are really trying to build something great. They're trying to make America great again. I hate to use that quote, but they're trying something new and innovative here. And so that could be bring wealth to the United States. But now you're forcing their hand. Now they're going to go to Bermuda. They're going to go to North Korea. They're going to go to South Korea, and they're going to try and, make their wealth over the other side of the world. That's our loss. So Gary Gensler, what are you doing? You got to be a little bit better for us. And that's generally what's happening. And, it takes a long time for this to kind of unfold and for new regulators to come in, for Gary Gensler to be replaced. And when that happens, then you get a more wholesome approach to the entire the entire space. But that does bring me to our next kind of topic, which is slightly relevant to this, which is Gary Gensler starting to face heat from the U.S. Congress. And there was a specific video about this, and I want to share just to watch around 1 minute of it, just with you, myself, Nick. Let's watch it, and let's kind of get a feel of what this was like.
That actually accommodate the existing regulatory framework and are specifically to the digital asset industry, so the crypto market can come into compliance.
These are rule books that are on the books for years, so we have not finalized any new rule specifically with regard to crypto. We've proposed some things in best execution. We've also...
Sir, reclaiming my time, the answer is...
All right, I'm going to stop it there, my friends. Now, the gist of that whole argument was that I'm going to give it to you here. We have Gary Gensler, who came in front of the congressional hearing. So he refused to give a definitive answer on whether or not Ethereum's native token, which is Ether, ETH, is a commodity or a security. When he asked if he agreed that an asset cannot be both a commodity and a security, Gensler kind of replied, all securities are commodities under the Commodity and Exchange Act. But he gave a little caveat there. And he said a security cannot also be an excluded commodity and an included commodity. So guys, he's playing word games here. When he's pushed to give a definitive answer of whether Ether is a security or commodity, he just couldn't do it. Even though he did previously say Bitcoin is not a security, but rather a commodity. So he's kind of already set the precedent there, but he doesn't want to say it for Ethereum. So I guess this comes down, Nick, how does this actually impact the audience? Why are we talking to you guys about this? This just kind of shows the lack of clarity in the market at the moment. Even Gary Gensler probably isn't sure about himself. He probably has his personal opinion, but he holds the office and he can't say it without proper clarity on this. And we just need more guidance to be put in place. Nick, what do you think about this video, mate?
I agree on the aspect that I think it shows that they don't have that clarity, especially when you're having that response. Like there was actually a bit where he was like kind of shaking in that line of questioning.
Yeah.
Kind of tough to watch. So I encourage, we'll put this in the show notes as well for you guys to have a look at. It just makes the point that there is a lack of clarity, I think, in the market. And, you need those better rules and guidance to be put in place, because the words from the SEC is essentially lack of clarity is not a problem in the market. It is lack of compliance in the market. So this is where it all hinges on. And I think we're showing maybe was actually went in favor of crypto with that really bad hearing that Gensler had. And I think a lot of people would have decided that, hey, there is a lot of clarity actually, and it's not just compliance that's the issue.
Yeah. I mean, the way I say it, he's in a tough spot, right? He's being bombarded left, right, and center. Protect the retail investor, protect the institutional investor who have different priorities. It's not an easy job for him, and I don't envy him at all.
Maybe getting on to our final SEC topic and sort of these regulatory issues that are going on at the moment, because it was a big week for this all over the industry.
Yeah.
There was another one where the SEC indicated their hostility towards DeFi. A big unanswered question at the moment is exactly how DeFi is going to be regulated in the market, and will DeFi be included one for one along the same lines as centralized exchanges? That's a big unknown in the industry at the moment, and the SEC has come out again saying that DEXs should be registered along the lines in the same method of centralized exchanges. It's important because it carries on the same hostility that other agencies have shown DeFi, such as the Treasury report that talked about DeFi and did a DeFi risk assessment, which was the first ever by the US government. And they, quote, said, DeFi services engaged in coveted activity under the Bank Secrecy Act have AML CFT obligations regardless of whether the services claim that they currently are or plan to be decentralized. So this is really hostile language, and it's really saying that, hey, DeFi tokens and DeFi platforms are going to be potentially facing the same compliance and the same rules as centralized exchanges. So this is really big for DeFi tokens, DeFi exchanges, because if we do see this happen in the next year, it's really tough goings for DeFi, because we'll find out whether DeFi can be profitable and make sense if you have all these other, KYC, all these other sophisticated, money laundering laws that have to be applied to these services. It even raises the question, hey, what does this mean for things like DAI? Things like Aave, like are you able to use that with as a US resident potentially without being KYC'd? So it brings up a lot of questions that we're going to see play out more and become more important in the next year.
Yeah, I mean, it's a kind of a wide broaching topic here, because it's DeFi. It's half of Ethereum. There's the NFT sector, then there's the DeFi sector, SushiSwap, Uniswap, all of the APRs that you see, that's all DeFi. So all of this could be impacted by what the report is saying here. And I guess it comes down to it. Do you guys trust that your protocol is decentralized? And at the end, does it even matter? Because the government says, you say you're decentralized, but you're not actually decentralized, so we're still going to come after you anyway. So, it makes the whole space super, super hard to deal with. And, we just need regulatory clarity. So, Nick, let's go to some positive news out there with bank issued euro pegged stablecoins on Ethereum. So I know this is recently coming out of the EU. So the latest news is there's a stablecoin that's coming out from the European Parliament. They approved it, world's first comprehensive package of rules aimed at regulating the cryptocurrency industry, including stablecoins, of course. So stablecoins like Tether and Circle's USDC will be required to maintain ample reserves to meet redemption requests in the event of mass withdrawals. And we kind of did see that with USDC depegging not too long ago, give or take a month or so ago. So they want stablecoins. They don't want stablecoins to become too large and will face being limited to 200 million euros in transactions per day. Now, I do have some extra information here, but they recently released a stablecoin on Ethereum, guys, on Ethereum called EUR Convertible. And it's going to be pegged 1-to-1. So, Nick, what information do you have about this, man?
Yeah, so to clarify this as well, it was issued by a private bank, not related to the EU or any of these laws, but is an idea that we're seeing these banks, really warm up, and they're really trying by doing and exploring potentially the access to cryptocurrency and cryptocurrency stablecoins out there in the market for their clients. So this one received a bit of flack because it was very centralized. It was only for qualified clients. It actually faced a lot of issues because people were unhappy with the code, that it didn't really make sense, or it was very inefficient.
I heard that. It was very inefficient on the Ethereum blockchain.
So I think due to this issue that they have to be in charge of who can transfer in and out. So they're putting in rules into it that don't allow people to use it permissionally. But even though all those negatives, I think it is a positive because we are seeing public banks or private banks really start to test out Ethereum and potentially start to use public blockchains as a means of utility. We saw this with a lot of Australian banks. There was a raft of sort of announcements of them testing out public blockchains on Ethereum, and then private instances which were Ethereum compatible. But it came down to, in their announcement, just testing out these crypto rails for their high net worth clients and some more sophisticated investors who may want to get in the space. So this was an ERC20 token, and even though it received some flack, I think it was overall quite positive because we are seeing Ethereum being more attractive, I guess, for people and banks to potentially use and harness.
And that's the key takeaway here, Nick. I think about it, Ethereum as a big wide ocean. Everyone wants to be on that public blockchain that's unlimited, uncensorable. And that's gold. That's like the oil in today's society. Everyone needs it to function. So that means I'm just bullish on Ethereum. That's my little take there. And I'm sure other people watching are also bullish on Ethereum. But
we could keep the positive vibes going, actually, because another positive I saw was some cool stuff with MicroStrategy testing out some email addresses that would convert to Lightning addresses.
Yeah, so, that's right.
I did a write up for our members. If maybe we can include that in the post here and in the podcast notes. But that was one that I noted and did a post for members that I was really excited to look at, research Lightning a bit more as well, and just provide a TLDR of what's going on in the space, because that's one thing that I'm feeling is kind of being missed by the market as well. A lot of important developments going on with making Bitcoin an actual form of medium of exchange, and accelerating that narrative, whereas everyone's focusing, I guess, on store of value. But a lot of stuff's happening in the Bitcoin ecosystem, and Lightning,
payment processing,
from Strike, from MicroStrategy to Spiral, which is Jack Dorsey's Bitcoin company. So a lot to look forward to, I think, and that was one that I really enjoyed doing for members.
Nice. Yeah, we'll definitely include that in the links below. Make sure you check it out. And just a small segue, make sure you do check out the Collective Shift platform because we do have great information and great educational content for you there. But Nick, I like the positive vibes. Let's keep it going, man. There's been two big crypto projects. First off has been Solana and crypto projects like Helium and Render moving onto Solana. And it's actually been doing pretty well. Did you happen to catch this news?
Yeah, really liked seeing Helium. I think they're successfully migrated now. It's taken about a few months to really get everything going. But I think in their first couple of days, they minted something like 1 million NFTs to represent a lot of their core infrastructure. really excited. We're going to see Render potentially do that move as well, away from Ethereum actually, just because they said that Solana met their needs for faster transactions, and transactions that you could do sort of in parallel, where Ethereum is sort of restricted in a certain way because of the way it was created. So really excited, because Solana was one I think we've been covering as well. Even with the FTX fallout, I think we were both in the opinion that, there's still something legitimate there. And so I'm really glad to see Solana continue to make some positive moves, and see if more projects come over, because they faced a bit of flack with a few moving away, but they're getting a few wins on the board.
Yeah, I fully agree with that sentiment, man. We do focus on heavy fundamental analysis just to make sure that the market isn't overreacting to some news that came out that FTX was involved in Solana. And of course, we see Solana still surviving now and projects willingly choosing to go over to Solana. But I've got some information on this as well. So while Helium was actually migrating that same day, first off, they managed to mint over 1 million NFTs, and Solana functioned perfectly. This is because they have a new capability on the chain for compressed NFTs. It allows you to mint 1 million NFTs for $200 or something like that, something super cheap, kind of great institutional advantage. But at the same time, while Helium was migrating, there was an NFT mint, a really highly publicized NFT mint called Mad Lads that was minting on Solana. And it didn't interfere one single bit. Guys, we all know what it's like when you're trying to mint an NFT. You load up MetaMask and your transaction is stuck, or the chain has halted or something. None of this happened with Solana, which made me super, super happy to actually see that happen. And as well as Render. Render is kind of like a kind of not a metaverse, but they use a mobile phone, and you can render digital items in real world and you can view it. They do have some great ties to Solana, but more to cover later on down the line. But Nick, I want to move on to Sui, because they did announce some tokenomics, and they did say no to an airdrop. People are unhappy about this, but they are having a public sale, so some people are happy about this. Can you kind of cover this for us? Because I'm happy, I'm unhappy, I don't know.
Yeah, so Sui is one of the most highly publicized blockchains that will launch over the next 3 months or whenever they're going to hit their mainnet date. They related to Aptos because these are two blockchains that came out from Facebook's failed stablecoin that they had to can. So these teams split, and using the core infrastructure and the IP that they attained working on the Facebook stablecoin project, and now they've split into two projects, Aptos and Sui. So Aptos already launched, and now we're seeing Sui not far behind. They've taken different routes because Aptos did a massive airdrop, whereas Sui said no to an airdrop, and they just announced details for a public sale. So one to watch out for, because no doubt we're going to see this plastered everywhere when mainnet hits. Thing to keep in mind, though, is that these are two blockchains with a lot of venture capital backing. There'll probably be a lot of hype around them, especially as they're coming into launch.
A lot of marketing.
So one to keep out for, and just make sure that you're understanding, I guess, the token distribution, who gets what. I know they're very heavily sided towards a lot of investors, early contributors, and not a lot going to the community.
Yeah, I always say you got to make sure you understand a little bit about the tokenomics of how these tokens are actually distributed. How much is the community getting, and how much is the private investor getting? And when does the private investors start unlocking, right? Do they have the tokens right away? Can they sell on the market? You never know. And sometimes it's always best to go back to basics and go back to Bitcoin, because there are no VCs there are a few VCs in Bitcoin, but they don't hold a huge chunk that can just sell the entire thing immediately. Yeah. So, but don't worry, guys, at Collective Shift, we will keep you updated if we think there is an opportunity for you to either get educated or make a good investment without having some investment advice. Now, let's pivot a little bit, Nick. Let's talk about things for the listeners to look forward to. So a whole bunch of stuff has happened within this last week and this month as well. Europe just actually passed a major law to be finalized in the coming months. It's called MICA. There's a new stablecoin bill being proposed in the US, and I think Australia is doing something, Nick, as well.
Yeah, there's the short answer here is just a lot of hopefully positive crypto policies, and maybe some negative ones will start to come come to the market in a real way over the next few months, and then towards the end of the year. A lot of this will, drag on to next year, but we're really seeing some positive steps forward, especially in Europe and hopefully in the UK later this year. Even here in Australia, we're seeing the government call out for companies, for people, just to have a say on their framework that they're going to be presenting hopefully at the end of the year. So we're going to see more of this, and hopefully we can see some real practical policies for the market, because as we said in the beginning of the podcast, there is just such a discrepancy in how the industry feels like there is no clarity, but then it's the polar opposite from a lot of US regulators. So hopefully more tangible policy that will then maybe pressure the US to have more pragmatic approach to the industry rather than the really hostile one that's going on at the moment. Also saw really interesting draft law out of Russia, which talked about potentially the idea of the bank mining and using cryptocurrency for settling international settlements and international payments. Would be a massive one, but could also have some scary second order effects if we have nation states and states getting into crypto. My thought is they may be starting to set the precursor for a lot of integrations with China's central bank digital currency, whether that's what they're sort of alleviating to. But if this is crypto or Bitcoin, something to be in mind of, because they did announce state government companies are starting to mine Bitcoin. So a lot to watch here. And if that comes into law, I think, as we could expect in the coming months, another flame to add to the fire, I think, of the Bitcoin narrative and what's going on in the space, where that may be good or could ultimately put more pressure if it turned into a political weapon, or which can easily happen, I think, and could get politicized.
Oh yeah, I definitely can see it becoming a political weapon, but I just keep thinking Bitcoin is not supposed to be political. It's supposed to be this thing that just exists, and then we benefit from its properties. Man, I don't know how I feel if it starts getting political, man. It's too much.
I saw a good tweet that said this is inevitable, that it's going to be the next fight, and how Bitcoin can get out of this if it's true, and to see how it copes under that pressure of nation states, then that's going to be the next fight on the hands, I think. So one to watch.
It's a scary thought. And then, Nick, let's look to end the podcast, and for all our listeners and for all our watchers out there, let's end on some rapid fire or anything that was overappreciated or underappreciated in the last week. I'll let you go first, my friend.
Thanks, Leon. The underappreciated I have here is NFTs. NFTs have received a lot of flack by people that are outside, maybe being associated with a lot of nonsense, which is definitely true. But I think we have to appreciate the underlying value of NFTs. So this week, a really interesting case study came out with Pokemon cards, which is one of the ultimate forms of collectibles.
Wow,
yeah. Have high prices, and they're pretty notorious for being collectible.
Definitely.
So we saw an example where a worker in a Pokemon, card factory was potentially stealing a lot of the rarest cards for themselves. And so it brought up a lot of issues of, you don't know how long this is going on for, but it presents a case study of why NFTs are very important, because nobody can sort of steal or rip off you if you're got it programmed into a shared NFT. Unlocking a pack, you can be certain of the properties behind it. So it really brings up a good case study. Really excited, not excited because it was kind of sad to see, but I think it shows why NFTs are important, because, it is important to have those digital assets, digital collectibles that are preserved, and the rules just don't get messed up for anybody. And you can really protect the value by having it as an NFT.
Yeah, that's quite sad to think that you're a collector and then someone who works in the factory just manages to steal all the rare cards that are supposed to be in your box, for example. But yeah, I can definitely see NFTs having a massive role to play here and helping you with scarcity, on-chain verification. Yeah, that's a good one, man. Thank you very much for sharing that.
What was your hot take this week?
So my hot take quickly was it's kind of a lesson in that the grass is not always greener on the other side. So I'm a big fan of Solana. We did have some projects leave Solana when it got a bit too hairy. One of them was a project called DGods. Now, DGods did have a derivative project called Utes. So Utes came across from Solana and went over to Polygon because Polygon or Matic gave them $5 million. Okay. And so they got some money. Yes, we're going to leave Solana. We're going to go to Polygon now. They went over to Polygon. They migrated fine. And now all of their community is complaining that there is no liquidity in their markets. They can't find anyone to buy any of the NFTs anymore. They keep underbidding each other to try and get a sell on their NFTs. So what does that mean? The grass isn't always greener. Yes, you might get paid money, but doesn't mean you will get the same community or get the same appreciation you had on Solana because you were the king over there. You go to another chain, now you're no one. No one wants to buy your NFT. So yeah, it's just something small. I don't know how I feel about it. It's like, yes, they did leave Solana, but at the same time, they got $5 million, so they have more runway as a project. But then the community is upset now, so it's all a big mess. The grass isn't greener. Just try and do good in the world and just leave it at that. Just try and be happy.
Yeah, I think
that was my little thing.
Another good case study to have a look at, and maybe potentially shines a light on the positives of Solana as well. I think we all know community is a pretty big point in a lot of blockchains. So
yeah,
and really interesting to see how they Polygon can rebound, and especially with the launch of new networks that they're happening. Really keen to see.
Yeah, that's right. That's right. Well, I guess, Nick, that's a wrap for this week, right? If you're looking for more insights, my friends, Leon and Nick, even Matt ourselves, see our revamped weekly Shift newsletter, providing free weekly market insights every Friday for you guys. Subscribe at collectiveshift.io/newsletter. So again, that's collectiveshift.io/newsletter. And we will see you very soon, my friends. Bye for now.